Here from Sage Investors, and I am going to be doing a quick mind map analysis of my decision to buy shares in Las Vegas Sands, ticker symbol LVS. This video can also be found in podcast form. You can download it through Apple Podcasts or through my website, sageinvestors.ca. So for every company or every stock that I'm analyzing, I basically go through a process of asking myself 8 questions. And usually after I've tried to answer these 8 questions, I will have a pretty decent idea whether I want to get into the stock or if I just kind of want to walk away. So essentially what I'm going to do is just walk through these 8 questions that I ask and apply them to Las Vegas Sands and kind of show you how the thought process that I incorporated that led me to the decision to buy it. So the first question I always ask for every company that I'm evaluating is what do they do? What is their value proposition? What makes the company unique in terms of the types of products and services that they sell? So when we look at Las Vegas Sands, their claim to fame, their thing is essentially they are in the entertainment and leisure business. So they basically own and operate a variety of resorts that offer all kinds of leisure activities. We're talking, you know, dining, food, shows, entertainment shows, and of course, gambling. They're a casino. They operate and run casinos, and as the name stands, Las Vegas Sands, they have a couple of big properties on the Strip. That's where they originated from, and also they have similar properties out in China, specifically in Macau, and also in Singapore. That's pretty much where all their properties. So if you're thinking about like what would be a Las Vegas Sands casino or a resort, well, if you've been to the Venetian or the Mirage, either in Macau or in Vegas, those are Las Vegas Sands owned properties. They are run and management. So essentially what they're offering here is entertainment. They're offering an escape from the day-to-day mundane realities of life. And so it's a place to go have fun. So their value proposition is fun. So who do they compete with? Are there other casinos and similar type resorts out there that they are competing with? Well, of course, if you've been to Las Vegas, you'll know there's 1 or 2 other types of casinos out there. Same with Macau. And so, you know, their main primary players or competitors would be like your Wynn Resorts, your MGM Resorts, and Caesars. Those would be your big players in terms of properties, like real estate, in terms of resort kind of properties. But then there's also the online component of growing area of online components, and so they have a fair number of online casinos out there, poker, all kinds of poker resorts. Even here in Canada, even the government has their own gaming websites. Where you can just go bet and gamble on pretty much anything, sports or anything like that. I'll get into sports a little bit later. So there's a lot of competition, and there's a lot of sort of one-upmanship kind of thing, trying to, you know, offer the most over-the-top kind of experience, entertainment experience. So the competition here is quite intense. So who would go to a Las Vegas Sands resort casino? Well, from my perspective, and been in Vegas quite a few times, it's basically they appeal to basically anyone with disposable income. If you've got cash to spare and are looking, and you're looking for a good time, they might have something to offer you. And I guess that's the whole addictive nature of gambling is again, you can have the moral conversation about it, but it is an appealing thing for a lot of people. People looking for with a lot of money, looking for a good time. This stretches from just from the younger crowd all the way up to the older crowd in terms of offering different types of shows and events. If you're in the sports scene, they offer a lot of sporting events on the whole sports gambling side. So they try to appeal to anybody who's got cash to spare and is looking to have a good time. And that leads to another question that we want to ask is, okay, great, these are people that might go to a Vegas Sands casino, but are they going to just go there once, or are they going to come back over and over again? And again, for my take is, I think because of the addictive nature, the addictive element, I would say they would come back. And as an investor, that's what we want to see. We want to invest in businesses that can generate recurring income, not just one-time income here and there, to be able to generate sustaining income and cash flow. So the nature of the whole gambling psychology and the whole ecosystem of gambling and the whole entertainment side of it, they just kind of all feed into each other, and they just appeal to people's kind of that ability to want to have a good time. So yes, there's lots of opportunities to get repeat business, and when they come back and they go over, it's not like they're just skimping; they're spending serious dollars here. And so, especially when you're trying to attract the higher net worth crowd who have got a lot of money to throw around, there's lots of opportunities there. So from that side of it, so that's great. Entertainment company. A lot of competition, appeals to a wide demographic who would be interested in buying their product over and over again. That's all great. That seems pretty good from an investment perspective. But at the end of the day, we're investors, and we want to invest in companies that can create tangible wealth, that actually make money. And that leads to the next question, which is an important question: is does Vegas Sands make money? So in terms of how I try to figure out answering this question, I kind of go to a couple of data points. And the one that I find more appealing is looking at the company's return on invested capital and comparing it to the company's cost of capital. And companies that have high returns on invested capital compared to their cost of capital are creating tangible wealth. They're creating positive economic profit. So when I looked at Vegas Sands, their return on invested capital over the last 3 years has ranged between 17 and 21%. And when you compare it to the company's cost of capital, which comes out about 9%, this is a company that's creating tangible wealth. It's interesting to know, even the company's called Las Vegas Sands, when you look at their breakdown in terms of their properties, greater than 50% of their sales comes from Macau. So even though they profess to be, and we break it down even further, Singapore represents 30%, and it's really in the U.S., specifically in Las Vegas, it's 20%. So really, when you're looking at Las Vegas Sands, you're really evaluating the company from the perspective of how it's doing in Macau and in Singapore. The Las Vegas component is not really a major component of their revenue stream. They're making a lot of money. They're making solid economic profit, but they're making it mostly outside the U.S. so that's something you got to be aware of and just understand too when we get into risks. The next question that I'll also ask, then we look at the company's financial performance, but now we want to look at the financial position. How strong is this company financially? And to do that, we really need to take a quick dive into the company's balance sheet. So whenever I look at the company's balance sheet, there's 3 areas I'm kind of focusing on. I'm focusing on their liquidity, their ability to meet their short-term, pay their short-term bills, and I look at their debt level. How is it too high, too low, excessive? And then I look at the quality of the company's assets. Do they have a lot of intangible kind of assets that can kind of distort the value or the financial position of the company? Because ultimately I want to buy stocks and companies that have good quality assets. So when I looked at the balance sheet of Vegas Sands, I looked at it from a liquidity perspective. Their current ratio is greater than 1, which represents the ratio of current assets to current liabilities. So it's greater than 1, which means they have enough current assets in their account to pay their day-to-day operational kind of costs. So this is a company which we want to see, because that means this company is not going to go out of business tomorrow. When we look at the debt level, I was quite surprised to see the company carry the debt level is a bit high. It skews on the high side of it. And at first I was a little bit concerned about that. But then when I looked at the company's cash flow that they generate about 4.5 in the most recent year, 4.5 billion a year, 4.5 billion in cash flow, which is really, really a lot, which is high, and which kind of gives them the ability to pay down their debts or manage their interest costs effectively. So their debt levels are high, but they are generating so much cash flow from their business that they can manage it. And that kind of offsets that kind of flag of the high debt side of it. When I looked at the company's goodwill and intangible assets, the quality of assets, it's very minimal. They have very, very little in the way of goodwill or intangible assets, which is good, which means this is a company that has when I look at all these elements together, it's telling me this is a company that's generating a lot of cash flow. It's generating strong profitability, and it's got a pretty decent financial positions. So these are good things that I'm seeing right now, that I saw when I was looking at Vegas Sands. The next question that I'll ask is, this is all well and good, but is there anything out there that could threaten this business, that could take this company down? What threats, whether it's competitive threats, political threats, what could potentially hurt this business in the short to medium long term? And there are some elements in play that can be very negatively impact the company, and so we need to understand them. The first one is the whole China concept. As I said, over half the company's revenues come from China. So when you're looking at Vegas Sands, this is very much a China play. So if we know what's going on in the news right now, the government has been targeting internally a lot of corruptive practice. They're trying to take down a lot of the corruptive type behaviors, and that has forced people to not want to go throw money around and rent fancy cars, buy fancy cars, fancy houses, and stuff like that, wear fancy watches, and that includes throwing money around in a casino. So that's the government continues to target that element of their society, then that's going to probably impact people's willingness to spend their disposable income at places like Las Vegas Sands. Then there's the whole trade, the trade issues, the whole trade war issues with the United States. If that continues to be in play, then you could see possibilities that the government could retaliate, and there's a few ways they can do that. One is in terms of the licenses. They could pull the licenses. They could pull the licenses from all these casinos. They could just say, "Hey, sorry, guys, we're going to you can't operate a casino in Macau anymore. Thank you, bye." They could shut them down like tomorrow if they wanted to. That's obviously a bit of a risk. Other risks that that the company is going to face is the whole the company. This is all about disposable income. So the nature of this industry is it is very cyclical. If the economy is doing well, then people are going to have more money. Then they're going to spend more money, and places like casinos are going to benefit from it. So right now the economies has been in an uptick, but now there's a lot of signs with higher interest rates. Again, the whole trade war issue that's going on, that whole cycle could be going the other way, and we could be going into a down cycle, which obviously doesn't benefit companies like Las Vegas Sands. Other risks that they have to have is new players. As I alluded to earlier, one of the big issues out there, I mean, potential threats out there to this company is the whole online side of it. And it's already happening. A lot of offshore companies are setting up little websites where you can just go play poker and play roulette and play whatever, and gamble online. And that's all well and good, but then there's potentially new players that could enter the play. And one of the ones I thought that could be a real player here is Amazon. Like, there's really nothing stopping Amazon from setting up a casino, an online casino, and really trying to take a chunk of the traditional bricks and mortar casino revenues out there. So that's potentially out there. There's potential for companies to enter into the space. It seems like there's regulatory issues, but I don't see anything stopping a company like Amazon from setting up a gambling website. And then the other challenge also that these companies face too is just staying relevant. As I say, entertainment is a very fickle. You can read that. If it is a very fickle business, it's sort of like, what have you done for me lately? You got to kind of keep raising the bar and kind of shocking and awing and going over the top compared to your other casinos. You want to kind of be like that P.T. Barnum kind of mentality. So that's a constant challenge. And so just staying fresh and staying relevant is a risk, is a challenge for these type of companies these type of companies. So when I look at all these companies, it seems like it's a decent, it's in a pretty competitive industry, competitive market, but it's a very profitable company. It generates strong returns on invested capital. It generates a lot of positive cash flow. It's got a pretty decent financial position, but there are risks. And the fact that most of the revenues is skewed toward China, and given the climate right now, could that put the stock in a pretty precarious position? That's a risk. The cyclical nature of the economy, if the economy goes into recession and there's a slowdown in growth, that can impact people's ability to want to spend money at a place like Las Vegas Sands. Then you have the whole potential technology aspect of it, where you've got new players coming into it. So it seems like a really good company. This is a company I've owned in the past, and I've liked the company before. But there are risks, and despite all these risks, I've bought the stock before. And when I looked at the company now, the question then comes to, is the stock cheap? So when I look at the company's valuation, I look at it from a few perspectives. The thing that got me interested in the company was the stock was in the 80s. And it's basically dropped into, which really got me interested in looking at it again, was in the low 60s. And so from a discounted cash flow perspective, the companies, from analysis that I've seen, the stock seems to be in a valuation between $60 to $77 per share. So given the fact it's currently trading in around $59, there's a potential really for about 20% gain on it from where it is, where I'm looking at right now. I looked at it from a multiples perspective, comparing Vegas Sands to the other casinos in terms of their price multiples. And if you look at it from a forward PE ratio, forward price earnings ratio, they're trading at about 20 times, which is cheaper than if you want to compare it to other casinos. So right now, if I'm looking at this stock right now, it's cheap. It's a cheap stock right now. But the issues, I think, what are plaguing it are what's taking the stock down from the 80s to the 60s has been, I think, this whole China dilemma and this potential issues that could occur with the company, given how much of the revenue stream is dependent upon the Macau market. So from that perspective, it looks cheap, but there are risks. But then there's other things that I think that I've learned that seem really, really appealing about the company too. One is this whole idea of sports betting. Sports betting. In the U.S., they just recently kind of throughout the ban of sports betting. It's legal now to bet on sports in the U.S. And so there's a lot of estimates out there that the industry, the U.S. gambling sports betting market, is worth about $150 billion a year. So that's $150 billion. That's a big, so from my perspective, that's a pretty good opportunity for a company like Las Vegas Sands to get into and to get a piece of that action. The other thing that kind of drew me into this whole area, this whole casino area, the gambling area, is this element kind of drew me in. But then I also learned that there's a lot of rumblings going on out there that Japan is going to allow casinos. Right now, in Japan, there are no casinos in Japan, but there's a lot of rumblings. The government is trying to raise money, looking to raise revenues, and there's some rumors out there going on that Japan is going to the government there is going to green light the operation of casinos in Japan. And again, if that's the case, and when you know the Japan market, tons of disposable income, a lot of money sloshing around over there. Gambling is a big deal over there. They may not do it there, but they'll go to a place like Macau to gamble. That could be a real opportunity also for Las Vegas Sands if they can to open up some properties over in Japan. So when I took all these elements together, the nature of the business, the fact that this is a very profitable business, making a lot of a lot of positive cash flow, fairly strong balance sheet, stock that is trading at a discount. It is a cheap stock, but with a lot of potential growth opportunities in different areas, sports betting, Japan. I thought this would be a pretty interesting entry point. And so at the end of the day, I made the decision that I was going to buy basically purely on this, based on this type of analysis. The stock to me looked like a really good buying opportunity to come in. So, and that's ultimately what I did. I made a decision to buy some shares in Las Vegas Sands, and this is pretty much the thought process that led me to make that decision. If you're interested in courses that I teach, where I kind of apply all these elements that I've talked about, and you get to learn all these elements, you can follow me through my website, sageinvestors.ca. You can find me on Twitter. I'm always commenting and sharing with you some of my thoughts and takes on the whole investing domain. And yeah, that's all I got. And that's what I got for you. So this has been my analysis of Las Vegas Sands. And thanks for listening in. Thanks for watching in. My name is Amin Reina of Sage Investors, and we'll catch you again another time. Take care. Bye-bye.